Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're a regular, welcome back. Before we dive in, I just want to say a huge thanks to everyone who's subscribed to the channel. There's more than 50,000 of you now. I'm really blown away that there's such a passionate community here and I'm super grateful for your support. And an even bigger thanks to my wonderful Patreon patrons for funding the channel. You guys are seriously awesome. Thank you so much. On Tesla's recent Q4 2019 earnings call, Elon Musk reiterated his confidence that Tesla can maintain a growth rate of over 50% per annum. For anyone who's ever looked at the effects of compounding growth over time, this should blow your mind. I'm not here to debate whether or not it's possible. You guys can do that in the comments below. I'm simply going to look at what happens if Tesla pulls this off. How will Tesla's business look throughout the 2020s with an average annual growth rate of more than 50%? How many vehicles does that equate to? How much revenue? How many Gigafactories? How much storage deployment? How much solar? This is not going to be a perfect analysis. It's a back of the napkin look at some ballpark scenarios that we as Tesla investors, fanboys, haters, or whoever else is in here can consider and ask ourselves, what if? At a really basic level, if Tesla increases its revenue, its stock price will increase. I know that statement just triggered a bunch of you finance nerds, so calm down. Before explaining, that's not always true. May I remind you, I said ballpark and back of the napkin. We're going on a big picture conceptual journey here, okay? Relax. Don't miss the forest for the trees. Now that's out of the way, let's see what the future may hold for Tesla if this 50% growth rate is maintained. History. Since its inception, Tesla has grown revenue at well above 50% annually, well above 100% actually, but if we take the last 6 years, the average is 54%. If we take the last 3, it's 55. Maintaining a 50% rate of revenue growth becomes exponentially more difficult over time. It's easy when the numbers are small. The bigger they get, the harder things become. 10 million to 15 million is typically easier than 10 billion to 15 billion. Yet Tesla seems to be doing what it needs to keep this up. To do so, Tesla must continually evolve. They have to do things differently, better. Manufacturing processes must improve. The products must improve. New efficiencies must be found. Whole new ways of doing things need to be invented. And this is what we see. One look at Tesla's patents, or evolving Gigafactory designs, or newly announced product lines, or lower capex spending per unit of capacity, all point to Tesla's willingness to adapt and evolve while continuing to scale. Tesla's track record is good. This matters. Vehicles. In 2019, Tesla delivered 367,200 vehicles, about 0.4% of the global automotive market. There's definitely room to grow. If a 50% growth rate is maintained throughout the 2020s, Tesla will deliver 550,800 vehicles in 2020, 826,200 vehicles in 2021, and 1,239,300 vehicles in 2022. Fast forward to 2029, and Tesla will deliver 21,174,602 vehicles. That would be about 23% of the global market. This is a stretch, but Tesla has maintained around an 18% global market share of EVs thus far. Even 18% of a 90 million strong global market is more than 16 million vehicles annually. However, car ownership has probably peaked. Transport on demand is here to stay. Robo-taxis will totally nullify the need to own a vehicle. Tesla probably won't sell over 20 million vehicles in 2029, but they won't need to. They have other products. Solar. The giant fusion reactor in the sky known as the sun emits enough energy in 1 hour to power the Earth's needs for a year. You've probably heard this. Almost everything on Earth is already solar powered. If you know your science, you'll understand this. If not, your homework for today is to learn about photosynthesis and the food chain. And if you want some bonus points, hydrothermal vents. Solar technology is following a declining cost curve, meaning over time, solar becomes cheaper and more efficient. Harnessing the power of the sun is a no-brainer. We don't have to do anything to generate the power, we just need to capture it. It's a free lunch. Well, until the sun becomes a red giant, boils the oceans and destroys all life on Earth. But we don't have to worry about that for a while. In the meantime, solar panels and solar glass roofs will become ubiquitous as they continue to fall in cost and improve in efficiency. The economics assure this. Tesla Solar took a back seat during the Model 3 production ramp, but it's now back in full swing. Solar is destined to become the primary source of energy on Earth. Tesla will have no problem scaling here. Storage. The way today's power grids work is really stupid. I mean, it's cool that we have energy on tap, but to continue the analogy, it's basically like having every tap in your house running at full speed 24/7, wasting water just so the moment you need some H2O, it's already there. In today's energy networks, electricity is effectively generated on demand. This is why we have peak rates. If lots of people are using power at the same time, more power plants need to be online to cater to demand. That's when peaker plants kick in. This is so dumb. Instead of pissing away unimaginable amounts of money paying peak energy rates because everyone is using their air conditioner at the same time, energy can be generated ahead of time, stored in batteries and used when it's required. This greatly reduces waste and costs. Plus, if you have solar, your stored energy is free, and if you have a surplus, you can sell it. It's actually a money printer. The payback period for rooftop solar and home batteries is still many years away, but this is falling rapidly. The payback period for large-scale battery storage in grids, however, is almost immediate. And this is where Tesla will generate the bulk of its revenue, from its grid-scale megapack and supporting software. The Hornsdale Battery Project in South Australia is a prime example of the incredibly compelling economics of using batteries and smart software to provide power. At a cost of 90 million Australian dollars, it saved energy customers $50 million in its first year of operation and saved the day more than once, stepping in to stabilise the grid when it would otherwise have imploded and caused widespread blackouts. Tesla's storage business is set to explode as towns, cities, governments, states, utilities, and even entire islands implement storage in their power grids, businesses, and homes. In 2019, Tesla Energy, which includes solar and batteries, did $1.531 billion in revenue. Elon Musk has said he believes energy can grow to be even bigger than their vehicle business. If we see 50% growth on energy revenue, by 2025 we're looking at $17.4 billion, and by 2029, $88.3 billion. Personally, I think Tesla will be doing well above this number. Gigafactories. In April, Tesla will host the Battery and Powertrain Investor Day to explain how they'll achieve annual battery output of multiple terawatt hours. My suspicion is that the plan involves licensing its tech to other automakers and possibly partnering to build factories. Either way, somebody needs to build a lot of factories. When fully expanded, I suspect each Gigafactory will be capable of producing around 1 million vehicles per year. Tesla continues to optimize and find new efficiencies everywhere, like the Genius Cybertruck, which will require a tiny factory footprint to manufacture. We know Tesla's existing facilities have scope for expansion, like Gigafactory Berlin, for which documents suggest planned annual output exceeding 750,000 units. Let's assume future Gigafactories will be built with multiple expansion stages in mind too. That means Tesla will need at least 20 Gigafactories by 2029, each producing 1 million vehicles per year. But that doesn't really account for storage, or the fact that Tesla may supply batteries to other automakers. Taking that into consideration, they'll probably need well in excess of double that number of Gigafactories. It's very hard to know exactly, but it will be a lot. This is why I think partnerships are in the future of Tesla. Software and robo-taxis. Tesla's software revenue will only grow over time as full self-driving is achieved and the in-car infotainment goes to a whole nother level. And then there's software purchases like the $2,000 acceleration upgrade, and who knows what else will come. The point is that software revenue is a small slice of Tesla today, but it will be a major piece tomorrow. Software is a very high margin business. And let's not forget robo-taxis. When Tesla's autonomous fleet awakens, they tap into a potentially multi-trillion-dollar market and look poised to take a huge slice. This one thing, robo-taxis, could cause such a dramatic step shift in annual revenue, and more importantly, profit margins, that a 50% compounded rate of growth may look embarrassingly conservative in 2029. And that brings me to revenue. This is the main metric to focus on. This is what we're really talking about when we're saying 50% growth. In 2019, Tesla did $24.6 billion in revenue. By 2024, this compounds to $186 billion. By 2029, $1.4 trillion. Yes, you heard me right. 1.4 trillion with a T. For context, in 2019, Apple did $260 billion in revenue, Amazon did $280 billion, and Microsoft did $126 billion. Each of these companies is worth more than $1 trillion today, while Tesla is around $130 billion. Over time, Tesla's margins will grow, not only due to the never-ending optimization and declining battery and computer costs, but much more importantly, as software becomes a larger piece of the pie. Again, for reference, let's look at Tesla's recent revenue history. If this isn't exponential growth, I don't know what is. By the way, the site I'm using here, which is featured in many of my videos, is HyperCharts.co. It's my favorite way to look at the numbers for stocks. They've sponsored today's video with a great offer. If you sign up for an account with the link in the description, you'll get 1 month of free premium access, which allows you to enter your own estimates, get quarterly results emailed direct to your inbox, synchronize company earnings dates with your calendars, and plenty more. Check it out in the description. So, if Tesla grows at 50% annually, we're looking at a company doing well over $1 trillion in revenue by the end of the decade, roughly 60 times as much as today. Do you think Tesla will pull this off? They haven't given me any reason to doubt, and their master plan outlines a pretty clear path to make this happen. The question I want to leave you with is this. If Tesla does grow revenues by 60 times this decade, and if Tesla's margins continue to improve as software becomes a larger piece of their business, what does the company's valuation and its stock price look like? I'm no genius, but I have a feeling that Tesla's stock may be worth a little more than it is today, if they can pull it off. Do you? I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. Thanks so much for watching. Let me know your thoughts in the comments below. Do you think Tesla can maintain a revenue growth rate over 50% for the next decade? What are their biggest challenges? How will they reach this scale? And of course, if you have any ideas for future videos, let me know. I read all your comments. PS, if you're still watching, you're awesome. This channel has kind of blown up since it launched, and I'm working on making the best possible content for you guys, but it takes time. Consider supporting the channel at patreon.com/solvingthemoneyproblem so I can continue creating content for you guys. There's a link in the description. Either way, the best kind of support is you being here and watching, so thanks again.